So we are getting big news here today on AMC, and that is what is causing the stock to drop today. I'm sure you have noticed you were flirting with positive for a majority of the day today, and ever since this news came out, you have started to fall, sometimes aggressive, but overall just a downtrending price action. And this is not necessarily bad news, and it's not necessarily true, and it's being put out there by news outlets, and it's very disheartening to see because it's just not true. Now, the first bit of this news is restructuring, and it says AMC Entertainment leaders reorganized with restructuring advisors. Now, this can be seen as a negative thing sometimes for markets, because if you're restructuring, it's usually because there's a problem, right? A lot of companies don't technically restructure until they're almost in bankruptcy or in bankruptcy itself. So there's a lot of that bankruptcy fear that is starting to play out, and that's what these news articles are starting to push right now, as you can see from this one and this tweet from, I can't even say that name, so I gotta give credit where it's due, but I can't even say it. It says, AMC, why is the FUD bringing in news articles from 2020 stating rumors of bankruptcy? And this is what you will see on some places when you are trying to figure out what's going on with AMC. So no, they did not just announce bankruptcy. The stock would be down way more than where it is right now, but they did announce they are restructuring. And like I said, that typically comes before a company does declare bankruptcy. So it's one of those weird situations. Doesn't necessarily mean anything. AMC still has hundreds of millions of dollars in the bank and plenty of capital to support itself, even if they continue to lose money for at least the next year, in which I don't think they will continue to lose money for the next year. I do think this next quarter will be close to a profit, if not in profit territory for AMC, because of the movies that are going to theaters. And as you guys can see, let's go ahead and pull it up. AMC is just slowly and steadily bleeding out at this moment in time, down about 9%. And today was a big day. It was a very important technical day for AMC, and it's honestly no surprise why you're seeing this drop. And if we do close down here at $6.16 per share and GameStop earnings are bad in after hours, this is a total change of trend, and I would watch for a break to the new lows. I don't necessarily think that is a guarantee as of right now. We have fallen quite a bit over the last 3 days or so, and it's mainly unwarranted, right? You fell 3 days ago, and this was on December 5th, 8.81%. Yesterday fell 9.5%, and today you're down about 9%. So you have shaved off a lot of the gains that we have seen in this last rally, and typically you don't just go straight down like this, especially when AMC was just looking so beautiful. Now, there is probably some other things and some other reasons why the stock is going down as well, but that's what we got for today, and you really want to watch how we react at these levels. Do we hold $6? Do we try to retrace to the upside by the end of the day? Maybe, hopefully even in after hours or later on today, there's a clarifying statement or new details on how or why they are restructuring, because that in and of itself can give you downside. But obviously news sites are taking full advantage of this to spread the bankruptcy concerns, when in all reality, AMC is a little bit different than your companies that restructure before bankruptcy. They literally have enough capital in the bank to support themselves for well over a year. So I don't think this is necessarily warranted unless new details come out, and we will get new details at some point. Then we could go from there. But as of right now, could be an opportunity to watch the stock move back to the upside, especially if GME earnings are good and this fear is overblown, in which That's what I'm thinking, guys, because out of nowhere, we're just getting bankruptcy rumors coming out, restructuring. I don't think it's as bad as what the markets are essentially saying it is, long story short. So there is that information, guys. As far as AMC and the Ortex data, let's go ahead and pull up the option activity for the day, and you are seeing a 45% positive order value. These are not super low numbers in which, you know, if AMC was really declaring bankruptcy and restructuring was leading to that, you would not see a positive order value of 45% on the day too. That's pretty high. That's almost in neutral territory. Still slightly bearish by 5%, but it's not a huge deal, and it's not telling you something is tragically wrong, right? Overall, you've seen 58 orders totaling $3.63 million. So looking not too bad, believe it or not. On some days, you could sit at 10 or 20% positive order value. You're at 45 for the day as of right now. Now, let's go ahead and look at the days to cover, sitting at 6.08, 100% share utilization. Free float out on loan, sitting at 20.06%. And shares that are currently sold short at 103.5 million. About 73,000 shares that were sold short today. And another side of this, guys, just so you guys know, is if this is overdone, obviously who's selling at this point? It is the hedge funds. They are shorting the stock. It is institutional investors. They might even be market makers or FTX or other crypto brokerages. Who knows at this point? But what I will tell you, if this is not actually AMC declaring bankruptcy, which I don't think it is, you might see a huge bounce off of that, because the overall trend and feeling of AMC has been a lot more bullish recently than it has been in a very long time, especially because movies are going to theaters. So if you're looking at a short thesis on AMC, I doubt the earnings are going to get worse from here, regardless if economic activity does slip up a little bit. I think the movie theaters are not going to be the first ones that are impacted by that, due to the demand and the want for people to go out and do things. So there is all of that information. Other key data points that did move the markets as well, I can't even really call them data points, but just things that happened today, was the Bank of Canada raised rates by 50 basis points. They were largely expected to do this, but they did signal that there is some demand problems that they might need to stop raising rates as aggressively. It's a little bit different from the Fed saying we want to wait and see what happens, not, our Fed Jerome Powell is not saying, guys, we kind of need to stop raising rates or we're risking a huge economic turndown. That's kind of the difference between what Bank of Canada just said and what Fed Jerome Powell has been saying. So that's why you did see a bit of a drop on the day because of that. And you also had Putin come out and say that the risk of nuclear war is rising. And this is probably because Ukraine has been using the West weapons to attack inside Russia. So these things did cause drops in the market today, but I don't think that is the overwhelming factor that is moving the markets. I think it's more so on the bond market. And as you guys can see from the bond market, this has been a more explosive rally in bonds than we've seen even back in August. The stock market has not played along. Typically, it will not. Throughout history, besides 2022, when this chart goes up, stocks go down. When bond yields drop, stocks go up, right? When bond yields go higher, stocks go down, because typically there are competing asset classes. So money flows from bonds into stocks and vice versa. So when one's not doing good, the other one's doing good. And bonds are really a rush to safety. So what are you seeing here today? The bonds are up 2%. 2% on the day. And why would this be happening? Well, investors, if they're fearing growth or a nuclear war, whatever else it is, more than likely they're fearing the odds of a recession. They're getting extremely worse over the last couple of days, weeks, and months. They flood into bonds. And what happens with that? When they flood into bonds, that's less capital for the stock market. So you tend to go down. But what has been happening in 2022 has been very unnatural. Bonds have been falling. The stock market has been falling. let's go ahead and pull up the S&P 500 for you guys real quick. Take off GME real quick, and they do have earnings in after hours, guys, so that can definitely and will definitely give the markets a big move, so keep that in mind. But what have you noticed about 2022? It's been pretty bad. You've trended down for a majority of the year, can't even get above the 200-day moving average and hold that level as of March of 2022. What has been happening in the bond market throughout 2022? Well, this is 2022. It's been straight down, and bonds have actually went down more than stocks, I would argue, right? It's been very painful for the bond market when bonds typically don't move like this. So what you have seen is your notional value of stocks and bonds have fallen. That's why there is the thing called the 60-40 portfolio, 60% stocks, 40% bonds. It's to say if stocks have a good year, bonds might be down a little bit, but you're going to make more money on the stock side. And then it's to say if stocks have a bad year, you're going to make more money because the bonds are going to be up a lot. There's going to be fear. There's going to be people buying the bonds. That has not happened in 2022. That's why people have been talking about the 60-40 portfolio is dead. And now if you start to see the bonds going up and the stock market continuing to go down, it's probably, I would argue to anyone, it is fears of a recession, and the bond market is usually not wrong. After all, it's much larger than the stock market on an actual dollar amount, right? So these things are concerning, and they are definitely fueling into the stock market going down. And we do have, like I said, GME earnings in after hours, and that could definitely move things around for AMC. But when the broad markets are acting like this and really going down this aggressively, it doesn't help out AMC at all. And GME earnings is probably going to be the last straw in the camel's back, or to break the camel's back, however that saying goes, because you're probably going to get a big move. If it's not an upside move, if it is a downside move, that's going to clearly break us out under the 50-day moving average, and that would confirm a bearish pattern. Now, for tomorrow, if you guys have not seen, we do have initial jobless claims for December 3rd, continuing jobless claims for November 26th, and jobless claims for week average for December 3rd. I think this will be important, but unless the number comes in much higher or lower than expectations, I don't think the markets will react too much off of that. Maybe a couple minute move, but it's not going to be the whole story of any given day unless, jobless claims go up huge. That might be a little bit different. That could be a bullish thing for the markets. Don't expect that to happen, though. It's not my base case. For Friday, PPI month over month for November. That one's going to be a big one at 1:30 p.m. And then at 2 p.m., you are going to have the Michigan Consumer Sentiment Survey. Depending how consumers are feeling about inflation and their inflation outlooks for the next year to 3 years, that's what is going to be the big thing that moves markets coming on Friday, guys. And it looks like markets are just getting ready for that. I don't really expect to see a big move tomorrow before we get the major data, but we want to watch the bonds. If the bonds keep going up, the stock market will break. In my personal opinion, the bond market could break as well, but if the bonds keep going up, it probably means a lot more downside for stocks. If bonds come down in a big way, it could mean the stock market could start to level out a little bit. And it's a super weird dynamic, and I know it sounds super weird to you guys because we've been talking about the bonds and stocks correlation, but it is essentially broke. And if it breaks to the other side, if we start this trend of, bonds going down again means more pain for the stock market again, it's not going to be good. It's not going to be pretty. So keep all of this in mind, guys. Go ahead, rewatch this video if you did not catch anything. In the meantime, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.